Kuala Lumpur Kepong or KLK has offered to buy IJM Corp's 56.2% stake in IJM Plantations for 1.53 billion ringgit. That's 3 ringgit and 10 cent per share. In a filing with the bourse, it said the acquisition will require the approval of the shareholders of IJM Corp and KLK at an EGM to be convened by the respective companies. It will also require the consent from the lender of IJM Corp and IJM Plantations, as well as any other authorities or parties. IJM Corp said it has in principle agreed to the deal. Both IJM Plantations and KLK had yesterday requested for suspension of trading of their shares pending an announcement. The edgemarkets.com yesterday reported, quoting sources, that KLK would be making an offer to take over IJM Plantations, with shareholders of the latter to be given the option of either a cash offer or share swap. IJM Plantations was last traded at 2.46 ringgit prior to the suspension, giving it a market value of 2.12 billion ringgit. Top Glove Corp saw third quarter FY21 earnings fall 29% to 2.04 billion ringgit from 2.87 billion in the preceding quarter. In a statement, Top Glove MD Dato' Lee Kim Miao explained that average selling prices peaked in February, and the softer quarter-on-quarter results were due to the adjustments it made in line with glove market pricing trends. The group also saw its sales volume ease, following a reduction in sales to the US on the heels of the temporary halt in shipments to the country in compliance with requirements of the US Customs and Border Protection. Raw material prices were also higher versus the second quarter of FY21. Revenue fell 22% to 4.16 billion ringgit from 5.37 billion ringgit. Earnings per share slipped to 25.44 cent from 35.77 cent. On a yearly basis, however, Top Glove saw a 485% jump in earnings from 347.9 million ringgit the previous year, as demand for gloves remained resilient. Revenue climbed 147% from 1.69 billion a year earlier, while earnings per share rose from 4.39 cent. It declared a dividend of 18 cent a share. Going forward, the glove maker said it will focus on making its business more sustainable. It said it has, among others, strengthened its migrant workers recruitment system and invested in green energy. In terms of governance, it said that executive compensation is linked to deliverables in key environmental, social, and governance aspects, and that the tenure of independent non-executive directors is limited to 9 years in order to maintain objective and independent deliberation, review, and decision-making of the board. The group remains positive on the industry's prospects going forward. Malaysia saw an increase in new daily COVID-19 infections for a second straight day, led again by Selangor. New cases came in at 6,239, raising the country's cumulative confirmed COVID-19 infections to 633,891 since the pandemic struck the nation last year. Selangor reported 2,291 new infections, followed by Kuala Lumpur with 704 fresh cases. 7,386 patients recovered as of today, leaving 81,575 still carrying high transmission risks. 905 are being treated in ICUs nationwide, 453 of whom are currently on respiratory support. 75 deaths were recorded, taking the death toll to 3,611. In a separate development, Mosdi Minister Khairi Jamaluddin, who is coordinating the National Immunisation Programme, reportedly said that the government is expecting deliveries of AstraZeneca COVID-19 vaccines manufactured in Thailand to be delayed. According to Reuters, Khairi did not specify to reporters how long the deliveries would be delayed or how many shipments would be affected. Malaysia was due to receive its first shipment of 610,000 doses from Siam Bioscience this month, followed by 410,000 doses in July and 1.2 million doses between August and September. Thai media reports say the company is falling behind in its scheduled production of the AstraZeneca vaccine. Last month, Thai Enquirer, citing a senior source within Thailand's Ministry of Public Health, said there has been a problem scaling up production within Siam Bioscience. It said initial reports suggest production levels in June are likely to be around half of what was scheduled. An industry report says last year was the worst period for retailers in Malaysia since 1987. In Malaysia Retail Industry Report for June 2021, compiled by Retail Group Malaysia, it said many retailers in the country were hit hard when people avoided going to enclosed places such as malls. There were tentative signs of retail recovery since the end of last year, but any hope for a rebound has now been completely dashed after daily new COVID-19 cases jumped to historical highs. The group said for the first quarter of 2021, the Malaysian retail industry recorded a negative growth rate of 9.9% in retail sales against the same period in 2020 versus the 0.5% contraction in the domestic economy. Still, it was better than the negative 13.4% estimate made by members of the Malaysia Retailers Association and the Malaysia Retail Chain Association. More retail businesses were allowed to open in stages from February 5th, 2021, and sizable crowds turned up at shopping malls in all major cities on the first weekend after MCO 2.0 was lifted on March 5th. Looking ahead, the group said retailers are unable to forecast their performance in the second quarter, citing uncertainties in COVID-19 related developments and the new lockdown measures within Malaysia. Malaysian Investment Development Authority or MIDA says it has approved 80.6 billion ringgit worth of investments in the manufacturing, services and primary sectors in the first quarter, a surge of 95.6% from 41.2 billion ringgit a year ago. MIDA said in a statement, these approved investments involved 993 projects and are expected to create 32,557 jobs. According to the state agency, the total approved foreign direct investments in the manufacturing, services and primary sectors soared 383% to 54.9 billion ringgit in the first quarter from 11.4 billion a year ago. The top 5 sources are Singapore 43.1 billion ringgit, the Netherlands 5 billion ringgit, South Korea 4.3 billion ringgit, Taiwan 500 million ringgit and Hong Kong 300 million ringgit. Meanwhile, domestic direct investments made up the remaining 25.7 billion ringgit, contributing 31.9% to the total approved investments in all the 3 sectors. Kedah, Selangor, Sarawak, Sabah and Kuala Lumpur contributed 68.4 billion ringgit or 84.9% to the approved investments. MIDA said the manufacturing sector is the biggest contributor, recording 58.8 billion ringgit, followed by the services sector at 15.6 billion ringgit and the primary sector at 6.2 billion ringgit.